Hey traders, Raghee here, and in this update, I'm going to talk about the only thing that matters now. It's not in the secret squiggles. That's my pet name for indicators, including my own. It's not in the price chart. It's really a single event, well, actually two events, that are parked on the calendar. And it does not seem to be what traders and investors were largely looking at today. What am I talking about? I'm talking about the calendar and tomorrow's day one of Fed Chair Powell testimony. Is testifying semi-annually on the monetary policy report, both Wednesday and Thursday at 10 a.m. All right, so why is that the only thing that matters right now? Well, I say that, and I know it's a fairly bold thing to say, but central bank policy is, yes, more important than what's happening right now in the Ukraine. I think it's really difficult for a lot of traders to separate news, which is the war. War is news, versus macroeconomics, which is what is the leader of the central bank of the U.S. going to have to say about inflation, jobs, growth, and the monetary path forward in terms of higher rates, fewer asset purchases, and a winding down balance sheet. That's far more important. So in terms of, again, we're talking the financial realm, we're talking investing and trading. The reason I say that, and this is where I'm concerned, a lot of traders are going to get broadsided by the move. The markets are a discounting mechanism. All right, what does that even mean? Okay. The markets have moved higher. Now let's be specific. All the equities have moved higher. So this is one of those times where we can talk about the indices or the markets broadly because they've all had a bit of a relief rally. A relief from what? A relief from what's largely been a fairly unrelenting downtrend. And you can see the confirmation of that down here in the JT trend. Okay. The relief rally comes as what? Oh, this is really interesting. Take a look at the move in the 10-year today. That is a bonkers move in the 10-year. Now, interestingly enough, it did close below the Darvis level. You can see that Darvis right in here. It did close below that. Tomorrow, I'm going to be looking for a minor low or an inside candle to maybe set up a fade short off resistance in ZN, or I'll buy IEF puts. We've done the IEF put thing before. Back in here, took a quick little ride to there, and then we might look for something similar where I might just look for about a 50% move in the ZN or IEF puts. Okay, that's on the radar. But the only way that happens tomorrow is if all this expectation for the Federal Reserve, and the mouthpiece, of course, is Jerome Powell, if that is not as accommodative. Now, it's hard to talk about dovish or accommodative, but if it's not as accommodating to the traders who are expecting no rate hike, fewer rate hikes throughout 2022. So you might say, well, Rog, how do we even know that? Well, first of all, the bonds moving higher was clue number one. Bonds moving higher is actually yields moving lower. That's a big reason that over the course of the last few days, tech has gotten a huge reprieve. And I don't mean just NQ. I mean XLK, XLY, XLC. Heck, even names like Tesla, Microsoft, right? These are mostly downtrends within the NASDAQ. Microsoft is tethered to XLK, Tesla tethered to XLY, but these are heading lower. Here's XLY, here's XLK. Why did they get a reprieve? Because if the 10-year is moving higher on the bonds, that means lower rates, and that just sort of takes the pressure off the NASDAQ. Who's moving rates around? Traders who think the central bank will inevitably be hiking less. How much less? I think there was at one point expectations for up to 7 hikes. Now we're talking about 5. All right, Rog, that all sounds great, but how do I measure this? Because you're always telling me, measure this, find places where you can measure rate of change. And I'm glad you asked. And I'm glad that is hopefully what you're thinking. How do we measure this? CMEgroup.com. Look for the countdown to FOMC page. We've talked about this a lot. what has happened. There is nearly a 100% expectation for a quarter point hike at the March meeting. That's going to be, the third Wednesday of this month. A quarter point hike. Notice what's missing. Remember that little column for the half point? Gone, right? What appeared? I mean, this is almost not even worth mentioning, but the hold column did reappear. So there are a very small number of traders and investors that think the Fed may hold. Okay, but you can see here 97.8%, nearly 100%. Anything above 80, I have found has been largely, quote unquote, fully discounted. That's what's in play. All right. So now what? Okay, and I'll kind of wrap up the video here, but just I want you to know what we're measuring. If we've already run out ahead of a narrative of a less hawkish Fed, what happens if he's not? He has to be not only less hawkish, clearly, but to keep the markets moving higher, he has to be even more than what was expected in terms of being less hawkish. In other words, favoring fewer, less frequent rate hikes. Why do I think that's a complete pipe dream? Always going to come back to the charts in terms of at least, I said that it doesn't really matter what's on the charts because Jerome Powell is going to dictate what happens next, right? But his problem, his reasons on the charts, let me show you here. Crude oil, over $100. Corn, continuing to make higher highs. That's taking soybeans higher, corn is higher, that's taking meats higher. He has a inflation problem, none more evident than in what's happening in crude oil, right? And does he really have a strong enough dollar to offset this yet? Not really. Not really. So this is his more pressing issue, right? And these have been the trades that have been working really well. Not Ukraine, gang. These were trends that were already in place before the war, before the Ukraine-Russia, geopolitical issue. Now, I want to mention this as we wrap up. Hopefully this gives you something to think about as we go into tomorrow. I'll see you all in Charts and Coffee. So if you have questions about this, let me know. But I am super excited to have a link for you finally. simplertrading.com/timeless. What are we going to talk about? I'm going to talk about these trades. I'm going to talk about these free tools, many of which most of you have downloaded from the Room Drive in the Simpler Futures options, day trading, training, and in my Sector Secrets Mastery rooms. So we're going to talk about how to use these tools. A lot of you have downloaded many of these from Countdown Traders. So now we're going to take those tools that you have and talk about the kinds of trades that we have been making. And not only why this approach that I'm showing you has worked for the bulk of my 30 plus years, but why is it working now? Isn't everyone struggling in this market? 80+% win rate. I don't say that to brag. I say that because you're talking to a trader who the first week of the year went 0 for 4, had 4 losers in a row. I think right now we're at something like 14 winners in a row. But again, 80+% win rate. Why? Did I do something new? Is it a new indicator? Nope. It's all the free stuff that I make available to you. The technical and the macroeconomic trends finally overlapped. And I'm going to show you what I'm looking at and what I'm doing and why I'm extremely excited for the continuation into March. All right. I'm just stoked that we can get these tools in your hands and I can show you what I'm doing. Now, all my cards on the table, this is going to be discussing what I'm doing in my mastery. So if you've been curious about, Rag, I've heard about this mastery, but I really don't know that it's something I want to do. I would love to find a lower cost way to do it. We finally have that way. All right. So I'm going to be talking about my trades, the tools, and actually, I think the easiest path into the mastery that we've had since it started a year and a half ago. So I want you all to come join me. Join the mastery or don't. Join me on Wednesday because it is going to help you understand how I've been doing what I've been doing throughout February and the path through March. Okay? All right. So slightly longer video. Hope that helps. That is what's in play for tomorrow. I'll see you in Charts and Coffee. I'll see you March 9. at 8 p.m. simplertrading.com/timeless. If you have any questions, leave them in the comment section below here through the video. Smash that thumbs up button if this content has been a needle mover for you. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.